Hello and welcome back to Cost Accounting. I'm your host, Dr. B. We are in our third week of our course, and today we'll be covering the concepts of job costing. Before we get started, I would like to recap where we are in the course. As I had mentioned, we are currently in week 3. Oh my goodness, week 3. We're almost halfway done already. At the end of next week, we'll be halfway done. So, wow, it goes by so fast, doesn't it? Okay, so going all the way back to week 1, we talked about cost accounting concepts and terms and behaviors, and we talk a little bit about the manufacturing income statement. In the second week, we talked about cost volume profit analysis, which is that fun concept of break even. And in this week, we will be discussing job order costing, which is a really fun and interesting concept. And it'll be very closely related to what we'll learn about in week 4, which is process costing and activity based costing. So before we jump into today's discussion, I want to highlight a couple of items. As you know, there's a homework assignment in each week, and those homework assignments are located in Gleim. If you ever have trouble accessing Gleim, if you have some issues, please let me know as soon as you identify that there's an issue. One thing I will note is our due dates are hard due dates. What does that mean? If you happen to miss a due date, which, as you know, is always the last hour of the week, which our weeks end on Tuesday nights, Eastern time. If that happens, you get a 0, right? And we don't want zeros. You don't want to get a 0 on a homework assignment because you missed the due date. Um, because what happens is in Gleim, it will automatically close. You won't be able to take the assignment late. Yeah. So if you come into a situation, please send me an email and notify me of that before it becomes a problem. So along those lines, please do not wait to the last minute to take any assignments or any exams. Waiting to the last minute is very detrimental to your grade. So please do not ever wait until the last day of the week to submit. That is not it. That can be very not good for your grade. Yeah. So along those lines, now that we're in week 3, a couple of things going on in week 3. You have your 10K discussion. This one's on the income statement. And the notes to financial statements specifically within the 10K. Where to find the notes to the financial statements? There's a couple of areas within the 10K to find the notes. And so that discussion will be around that. You can see also along those lines there is within the discussion, it's surrounding inventory valuations. You learned a lot about those, hopefully, back in the Principles of Accounting 2. Work in process, raw materials, work in process, finished goods, the valuation of inventory using first in, first out, last in, first out, and weighted average. Along those lines, because you're all utilizing manufacturing companies, your manufacturing companies do have raw materials, work in process, finished goods inventories, and they are using a valuation method. You'll be able to find that information in the 10K. As you know, raw materials, work in process, and finished goods inventory are found on the balance sheet under inventory. And the inventory valuation method, you'll actually be able to find which method they're using in the notes. And so the best thing to do is use that fancy Control F or the find feature in the 10K document and search for those key terms. And that'll help you to get you through our discussion for this week. In addition to your discussion, you have your Gleim homework assignment, homework 3 within Gleim, and that'll cover job costing, which we're about to talk about today. And Also, a couple of more things. This is a very busy week. I know, I'm sorry. There's just a ton to cover this week. There are a few busy weeks in this course. This is one of them. You have your career exploration assignment, which you've probably done in previous courses. As you do your career exploration assignment, try to make it as closely related to cost accounting careers. That'll help you to kind of explore those options within cost accounting. And last but not least, we have our first exam for the course. Exam 1 will cover content that you learned in weeks 1 and 2. Okay, so it'll cover cost accounting terms, it'll cover cost, volume, profit analysis, those types of questions you'll find on exam 1. My recommendation is to try to take your time answering the questions on the exam. A number of questions, I believe, from what I can recall, are very similar to the number of questions that you've seen on your previous homework assignments. So it's not too lengthy. It's also not too short. But take your time, but don't take too much time.
How much time is given for the exams? Do you know, Professor?
I don't remember, Brandon. That's a great question. I want to say it's.
That's all right. I'm sure it'll say it on there. I was just curious.
It does. No, you're right, and I'm sorry for not knowing. I should have known that. So let me go ahead and actually log into Gleim, and let's just take a quick look, shall we?
And then the second question, just while you're pulling that up, is do you know for the exams, like say exam 2, is that all encompassing from week 1 to week 6 or whatever it's in, or just what we learned since the first exam?
Just what you learned since that first exam. Yeah, I try to limit those as much as possible. So,
and the same thing with the final, is that just from exam 2 to the final, or all encompassing?
It's just exam 2 to the final. Yeah, absolutely. I try not to test you more than once, right? Because it's a lot to remember. So exam 1 is 40 minutes in length, 20 multiple choice questions, just like the homework assignments were. It's a variety of questions. The questions will of course be slightly different than what you were covered in assignments 1 and 2, but they're on the same content. So great question. Thank you so much for asking and reminding me.
Dr. B.
Yes, Santa.
Is it possible to make it an hour since it's an exam instead of 40 minutes?
I could. Yeah, I could do that. Yeah, that's fine. Yeah, I'll make that modification this evening. Yeah. Absolutely.
One more question, Dr. B.
Gio, go ahead.
Is there any way to utilize like the old homeworks we did in Gleim to retake those, to practice with those? I know we can review them, but I didn't really see an option to retake them. Or
You
just
can
like, have, like, a
retake them
practice.
up to 2 times. But the problem with that is I don't think the system allows you to do it after the due date's passed. So the short answer is no, I don't think you can. But you can, of course, as you know, review. But no, I don't think you can take it again after the due date has passed.
Okay.
Good question.
Thank you.
Absolutely. Yeah, that's just some of the limitations that we have with the Gleim system. It's not operated by UMGC, so we don't have a whole lot of control around how Gleim operates, since it is a third party. But that's good feedback. Absolutely. Okay. So let's go ahead and jump into the content, and we will discuss the concept of job costing. Job costing. Oh, my goodness. One of my favorite topics, actually. I'm sorry, where's my darn slideshow? There it is. Okay. Okay, let's get started. So this concept, oh my goodness, I apologize about that gray on the blue. It's hard to read. The concept of job costing. As you know, this course covers concepts through cost surrounding manufacturers. From the concept of manufacturing, the company receives a job order from the customer. A job order is simply that the customer asks us to manufacture a certain product or products with a certain quantity at a certain price. Hence its name, job order, right? This information is housed within our cost accounting system, and the data that takes place within the job order, the reports are generated. We measure, record, and report the product costs. As you recall, product costs are direct labor, direct materials, and factory overhead. Those are your product costs, total costs to make a product. Another system, another type of system that we'll cover in more detail in the next session is called a process cost system. A process cost system is not based on customer orders, but it is continuous. What do I mean by that? A job order cost system, we receive the customer order, tells us how many items we need to manufacture, and that's it. And then we ship off the finished order to the customer. A process cost system is where we continuously manufacture. An example of a process cost system would be an oil refinery. It's continuous. It happens regardless of a customer order. A dairy farmer that produces milk, that is a continuous process regardless of the customer order. A food processor that processes food like chicken, beef, vegetables, so forth and so on, the stuff that you find at the grocery store. That is what we call a process. It's continuous and it's done regardless of customer orders. A job order cost system, which is what we're talking about today, is based off of individual jobs. Examples of job companies that perform based off of jobs would be special order companies like a guitar manufacturer, for example. That is a job-based company. We'll talk more about that. Product costs are important to understand because the information helps us to set product prices, control operations, and to develop financial statements. Setting prices, the product costs help us to set prices where we set the product price, which is the price available for sale to a customer, based off of the product costs. We need to set the price, of course, higher than the product costs if we want to make a profit, or at least an operating income, right? Controlling operations stem from product costs where we can eliminate waste. It helps us to be lean, right? Through the controlling operations based off product cost. And of course, we use product cost to develop financial statements. The cost of products drives our income statement and our balance sheets and our statement of cash flows, of course. A job order cost system is based, of course, of the customer's order, right? That's why we call it a job order cost system. It's based on a customer order. Customer orders, I should say. We typically we manufacture our products based off of these jobs. The jobs come from the customer. We produce the products based off of the job at a set quantity, at a set price, right, exactly. And this process is used by companies that manufacture clothing, instruments, computers, sometimes automobiles. It depends. Actually, that one's kind of tricky. With automobiles, there's only a few companies that use the job order cost system. Some companies actually use a process cost system, which is interesting in itself. And other companies that use the job order cost system would be like, let me think here for a second. Company that manufactures shoes, I guess, like Nike. That's an example that use job order cost system. A company that I'm just trying to think of some of the companies that you all selected for your projects. Boeing, another classic example of a manufacturer that uses job order cost system. It's done based off the customer order. That's the point that I'm trying to get across. The opposite would be a process cost system. This is, as I said before, a continuous process. Example would be a food processor, oil refinery, paper producer, chemical processors. These are all companies that operate continuously. They process continuously, regardless of the customer orders. So as we go through today's discussion on job order costing, I'm going to use the example, and I've used this example before, and it's not the last time you'll see it. Well, I'm sure we'll use this again. It's based off of a guitar manufacturer called Legend Guitars. The job order cost system that we utilize is based off of the customer orders, as I had mentioned. We receive the job order from the customer. Once it gets into our queue, we start making the guitars for the customer by, of course, purchasing and using direct materials. Take it out of direct materials, put it into work in process, start cutting and assembling the guitars, take it out of work in process, put it into finished goods. When it goes into finished goods, the job order is then complete and sent off to the customer. And of course, throughout that, as you know, there are prime costs, conversion costs, and direct labor associated with this process. Direct labor and direct materials are considered prime costs. Direct labor and factory overhead are considered conversion costs. Factory overhead includes indirect materials, supervisors' salaries, utilities, you name it, right? And all of that gets applied to the total cost of the product. As we go further into the course, as you'll find, there are a few different ways to apply factory overhead. And we've talked about a few of them, and we'll talk more in next week. We'll talk about how to find different rates for applying factory overhead. So again, the job order cost system is based off of the customer's individual jobs. As you know, in business, we typically take inventory. Job order manufacturers actually use the periodic inventory system. You probably remember the term, hopefully you remember the term. A periodic inventory system is where there's a physical count completed at the end of the accounting period. It could be the end of the month, halfway through the year, end of the year. And this physical count, we identify where we are in inventory. Inventory exists at raw materials, work in process, and finished goods. And as you know, it comes once we sold it to the customer, it moves out of finished goods inventory and it goes onto our income statement at that point as a form of cost of goods sold. And it's important that we understand where we are with our inventory, how much we have in raw materials, how much we have in work in process, and of course, how much we have in finished goods. So as we explore the job cost system, I want you to understand the physical flow of the process of the product moving through the process. So it starts in the storeroom where all of our raw materials are. We take it out of the raw, well, actually, it starts with a purchase to our suppliers, right? But then it gets to our storeroom. And as we receive the customer's job order, we take the raw materials out of the storeroom and we put it into work in process. Within work in process, we have a couple of departments. We have the cutting department and the assembly department. And in those departments, they're continuously working toward completing the customer's job by cutting the wood and assembling the guitar. And then, of course, as you know, in the work in process, we take the raw materials cost and then we apply direct labor and factory overhead at each stage, right, in each department. Those costs, as they accumulate, get entered onto the job order cost sheet that we'll talk about here shortly. The job order cost sheet consists of all of the costs that go on that attribute to the manufacturing of the finished goods for that respective job order. Once the production process is complete and work in process, we then move those products to finished goods where they sit in the warehouse and then eventually make their way to the customer. And we take them out of finished goods and put it onto our income statement as a form of cost of goods sold. Oh, sorry. So in our job order cost system, we use perpetual inventory, but we also use the periodic inventory system, depending on the manufacturer. The perpetual inventory system, as you know, is continuous. The periodic inventory system is where we do physical counts throughout the year. The perpetual inventory system helps us to more closely control our inventories. And those inventories are updated on our raw materials, work in process, finished goods inventories. Earlier, I had mentioned we have this thing called the job order cost sheet. The job order cost sheet, in this example, what you see here is jobs 69 through 72. In addition to those, we have other cost sheets. And within each cost sheet, we have our ledgers. We have raw materials inventory ledger, work in process ledger, finished goods ledger. Our raw materials ledger is where we account for the cost of all of our raw materials: wood, string, metal, okay, and all of those are accounted for on a raw materials ledger. Within the raw materials ledger, we have the subsidiary ledgers: maple, oak, hickory. Those are all types of wood, so forth and so on. For our work in process ledger, we have the job orders that we are currently have in work in process. And within those job orders, we have the costs associated with each job. And for our finished goods inventory ledger, we have our completed jobs and the total product costs associated with each job. So materials ledger, again, this is raw materials. It's important to understand how the physical flow works. For raw materials, we purchase our raw materials from our vendors or suppliers, and then we use those raw materials in the process. When we purchase our raw materials, we debit our, I'm sorry, we debit our raw materials accounts, and of course we credit accounts payable or cash, whichever one we're using to pay. And when we start to use our raw materials, we credit our raw materials account. We credit our raw materials account and we debit work in process. We'll show you what that looks like. So in this example, letter A, we purchased 10,500 of raw materials from our vendor for maple wood. We received our wood, 10,500, so we debit 10,500 to our raw materials wood account, and we credit accounts payable, likely, right? So that's the transaction A. Transaction B is when we start to use our raw materials for our work in process, for our customers' job orders. And so we can see that job number 71, we use $2,000 worth of maple wood. So we credit our raw materials account maple wood $2,000, and we debit work in process $2,000. And that's job 71. Job 72, which is a separate customer job order, it looks like we used a total of $11,000 for maple wood. And we can see that what we've done there is we credit that amount for our raw materials, and we debit work in process. We can see that how the job order cost sheets are built now. Toward the bottom of this slide, we see job order cost sheets for job 71 and job 72 respectively. And you can see that we, in some cases, you might have a beginning balance if there was a previous job or it was a work in process, and it's still being added to. And we can see job 71, we added direct materials 2,000. Job 72, we added 11,000 for direct materials. And as we process it, we'll add, of course, our direct labor and factory overhead. There's a report that you need to know. It's called a receiving report. This is when we receive an order from our vendor, from our raw materials vendor. So let's say we have a wood supplier that supplies our maple wood to us. What we'll do is when we receive that maple wood, we'll receive what we call a receiving report, or packing slip is probably what you've heard before. And that packing slip, we compare it to our materials requisition form, or I'm sorry, that's a wrong term. Our materials order form, right, that we sent to our vendor. Materials order form, we compare that to our receiving report to verify and validate that we received the wood that we ordered at the price that we ordered at and at the quantity. This is hopefully you've learned this already. That concept is internal controls, right? So when we receive our our order from our supplier, we debit our raw materials account and we credit accounts payable or cash, depending on how the company is paying for it. Now, when the folks on the shop floor or the assembly line, they're ready to start processing, they're ready to start working on our customer job orders, they need to get the raw materials from the supply room. And to do that, they'll issue this thing called a materials requisition form. And that materials requisition form is based off of each respective job. It tells the storeroom exactly how much or the quantity that they need to perform that customer's job. That information then gets transferred to the job cost sheet. The job cost sheet is used in the work in process stage, and it will include the material, the cost, and the quantity of the raw materials used for that respective job. To account for the transfer of the raw materials to the work in process, we debit work in process and we credit raw materials or that respective raw materials account. So that's materials. What about labor? As you know, the employees on the assembly line are putting together the guitars in our example. And we need to account for direct labor. So for those of you who've ever punched a clock, including myself, the reason why employers have us, well, we call it punch a clock, right? You clock in, you clock out. That process helps the employers to track time. And in manufacturing, it gets a little bit more detailed than that. Instead of just clocking in, clocking out, and doing a desk job, it's much different than manufacturing. In manufacturing, we use these things called time tickets. The time tickets record the amount of time that you are spending on each individual job. The reason for this is because we need to properly allocate the labor used in the manufacturing process for that specific job. And this is how it works. So job 71, we've already recorded our direct materials, $2,000, just as we saw previously. Now we're recording our labor, the amount of labor that we're spending on each respective job. So for job 71, we have a few employees, as you can see on this job. Particularly, I'm looking at one employee in front of us who is in the cutting department, and they're working on job number 71. And it looks like they spent about 6 hours on this particular job. They clocked in, they clocked out, they clocked in, they clocked out. Looks like, they had a lunch break in between. That's good. Got to eat lunch. So we see the 6 hours, their hourly rate is $10 per hour. So as you expect, that's $60 of labor for that one employee. What we do is we add up all of the labor for each employee that spent working on that job, and we enter that amount on for direct labor onto our job cost sheet. And the way we enter that information onto our job cost sheet is, is a debit to work in process and a credit to wages payable. A debit to work in process and a credit to wages payable. And this transaction records the labor that has been spent on each job. So that's how we record the labor on a job cost sheet. Now, of course, as you know, as we produce any type of finished good or any type of product, we have direct materials, direct labor, and factory overhead. Factory overhead, as you know, includes indirect materials, it includes utilities, depreciation expense, rent expense, anything that is indirectly related to the manufacturing of our finished goods. And so how we account for this for each job, you might be asking. Well, there's a couple of different ways. We typically record the indirect, factory overhead through a process where we identify all of the indirects that is being used for that respective job, and we will record it to our work in process. Now, here's how it works. First, we debit factory overhead to increase our factory overhead, and we credit materials used. That's the indirect materials, right? So when you see materials used, for factory overhead, when we're talking about factory overhead, when you see materials, we're talking about indirect materials. This would be things like sandpaper, glue, small things, right? Small indirect materials. The reason why we consider those types of materials to be indirect and not direct is because direct materials only includes the materials cost that make up the majority of the cost of the finished good. The majority. So in our example, of course, wood and string and the metal facets. That's direct materials. That makes up the majority of the cost of the guitar. The indirect materials would be things like glue, sandpaper, so forth and so on. Though that's indirect materials because they do not make up the majority of the cost of the materials. I just want to make sure that that was clear because some students get a little confused when they see materials in factory overhead. So we debit factory overhead and then we credit everything that was used for those jobs. So we credit indirect materials, we credit wages payable. The wages payable, that's the indirect labor. Okay, when we talk about factory overhead, when you see wages, it's indirect labor. That'd be the supervisor's salaries, right? We also credit utilities payable. We use $900 worth of electricity. We credit accumulated depreciation, $1,200 of factory equipment depreciation. And so as you know, your debit's always equal to your credits, right? That's how we factor our factory overhead. Now, how do we apply the factory overhead to the jobs? That's different. Okay, we figured out what our factory overhead is based off of that previous slide. Now we figure out how do we apply it to each respective job. Now, as you know, applying factory overhead is not easy. This is probably one of the more difficult cost accounting concepts is the application of factory overhead. Since factory overhead costs cannot be traced to specific jobs, we allocate the costs based off a few different methods. And this is where what I'm about to talk about is going to be very closely related to what we'll cover in the next discussion when we talk about activity-based costing and the concept of allocating overhead. So I'm going to talk about a couple of different methods of allocating overhead, but I'm primarily going to talk about activity-based, which is activity-based costing. This is the most commonly used method for allocating factory overhead. When we allocate factory overhead, we do that based off of cost allocation. It's like a job, right? We base it on a job. And this cost allocation, we take into consideration the allocation base, or what we call an activity driver. An activity driver is, for example, in the manufacturing setting, it's the hours the machines are running, or the hours the hours the employers are using, or the cost of direct labor. That could be the activity base or the activity driver. And that is important to know, because when we apply the total factory overhead to the jobs, we use either direct labor hours, direct labor costs, machine hours, or some other activity base to make sure that we're applying the proper amount of factory overhead to each job. And so to do that, we figure out what's the rate, right? The rate is it's an hourly rate that is predetermined for factory overhead. And to figure out what that hourly rate is we take our total factory overhead costs divided by the activity base. So what is the activity base? Well, it could be, again, it could be machine hours, it could be labor hours or labor dollars, depending on how the company applies whatever they decide to be their activity base. And of course, it depends on the company. In our example, we use direct labor hours as our activity base. So in our example, we have budgeted or estimated, budgeted $50,000 of factory overhead for the year. And we've also estimated or budgeted that we will utilize 10,000 direct labor hours in a given year. So to calculate the factory overhead rate, we take our total factory overhead estimate or budget, in our case 50,000, divided by the activity base, which our case is 10,000 direct labor hours. So 50,000 divided by 10,000 is $5 per direct labor hour. Okay, now that we figured out what our factory overhead rate is, we then take our $5 per direct labor hour and we apply it to the amount of direct labor hours we used for each job. So if it took me 10 hours to complete one job, I would take my 10 hours times my $5 per hour, and that would be my factory overhead for that job. So to find the, what am I trying to say? In activity-based costing, which is the method that we're talking about as we allocate factory overhead and finding the factory overhead rate, we look at how the factory overhead allocations are applied to each respective job based on the amount of time spent on each job. In this process, that we just discussed is that this process of allocating factory overhead rate based off of something like labor hours, that is a part of activity-based costing. The labor hours is the activity base, and it's based off of the activity of machining, inspecting, quality control inspections, moving products from one place to another. Those are all activities. And those activities help us to better understand our activity base. And again, we'll talk more about, dive deeper in the future, in our next conversation next week. So looking at our example, job 71, we have our employees, our individual employees collectively worked a total of 350 hours on job number 71. So to find our factory overhead allotment, we take the 350 hours that our employees worked and we multiply that by $5 per direct labor hour of factory overhead that we calculated based off of our factory overhead rate. So 350 times 5 is 1,750. We take that total amount and we place it onto our job cost sheet. And now the job cost sheet is complete. We see beginning balance, direct materials, direct labor, factory overhead, direct materials, direct labor, factory overhead, plus our beginning balance. We add all those things up, and that is the total job cost. So how do we apply it to work in process? How do we apply it to work in process? So earlier, I had said that we have our ledgers and our subsidiary ledgers for each inventory level. We have raw materials, work in process, finished goods. Each of those accounts have their ledgers, and then they have their subsidiary ledgers. The subsidiary ledgers for work in process are the individual jobs. The primary ledger is the combination of all of the jobs within work in process. So to find what that is, we simply add up the hours and the factory overhead that has been applied in the work in process stage. So looking at our individual jobs, we have job 71, job 72 that are in work in process. We've added up our direct labor hours, 850 labor hours. Our factory overhead that has been applied, we found to be 4,250. And we got that, of course, by adding up job 71, job 72 for applied factory overhead. Another way to validate that amount is correct would be to simply take the total direct labor hours for the accounting period in work in process, multiply that by the factory overhead rate, and we see that, of course, it's the same, 4,250 in our example. The journal entry. Of course, the journal entry, right? We gotta talk about the factory overhead journal entry. So in order for us to apply the factory overhead to the respective jobs, we debit work in process to increase your work in process, and we credit factory overhead. We saw that in the transaction that we did before that. I'm going to go back a few slides. The transaction we did before that, to accumulate our factory overhead, we debited factory overhead and we credited the respective indirect accounts that attribute to factory overhead. So now, after we've done that, the other journal entry, of course, that we would make is we would debit work in process to increase our work in process, which is reflected on our job cost sheets, and we credit factory overhead that amount for each respective job. And that's how we apply the factory overhead. So to increase factory overhead, you debit it. To decrease it, you credit it. There are situations sometimes where we over apply and under apply because it's estimated, right? As we just learned, the rate is estimated. So there are some situations where we under apply or over apply factory overhead. If we under apply it, we didn't apply enough factory overhead to the respective jobs. And if we over applied it, we applied too much. This stems from the idea that we are using estimates, and we estimated the hourly rate, right, for applying factory overhead. And because of that, there are situations where we either under applied or over applied. Now, to address that, what we need to do is we need to make an adjusting entry, as you would expect. And in that process, we would debit or credit the under applied or over applied factory overhead account. In our example, we have an under applied balance of factory overhead and an over applied balance. And in this process, what we do is we would make our respective debit and credit in the adjusting entry. That happens from time to time, right? Now, at the end of the fiscal year, we need to clear our temporary accounts. As you know, that is a part of the accounting cycle that you probably don't remember, or hopefully you do, from Principles of Accounting 1. We talked about the accounting cycle very early on. That was probably one of the first things you learned in accounting. And in that process, we learned about this thing called temporary accounts. Temporary accounts are on your income statement, and those get closed out to the statement of owner's equity through retained earnings, right? And there are a couple of other temporary accounts and that you may not have heard about, and one of would be the under applied or over applied factory overhead accounts. Those are also temporary accounts, so those don't get carried forward. Factory overhead, of course, does carry forward because it's factory overhead, right? The cost still exists, but we need to make sure that at the end of the fiscal year, whatever is in factory overhead does not carry over. Okay. So, and to do that, we utilize those methods of applying factory overhead. As we sell our products, and as we fix our under applied or over applied situation, we clear the under applied, over applied accounts by debiting or crediting cost of goods sold. And the reason why we do that is because when we sold our inventory, our finished goods inventory, we either under applied or over applied overhead based off of our estimates. And in order to clear the under applied or under applied or over applied factory overhead accounts, we either need to debit or credit cost of goods sold to clear them. And that's what this shows us.
A quick question.
Yes, please, Hector.
So factory overhead, is that an expense account?
So yes. Well, yeah, that's a tough one. It's actually factory overhead's technically a temporary inventory account. So it's a temporary asset account is really what it is. And because it's a temporary asset account, as you know, with any temporary account, it does need to be closed out at the end of each fiscal year. So factory overhead, you'll find, that's a good question. In most cases, the company will report their factory overhead account as a temporary asset account. And you'll find that on the balance sheet under inventory, typically. It sounds like it should not be, right? You know, with its name, factory overhead. Oh, that sounds like an expense. It's not. The reason why it's not an expense is because it does ultimately get transferred to the finished goods, because factory overhead is added to your direct materials, direct labor, factory overhead. Factory overhead, it's a temporary account, and so technically it's a temporary asset account. Does that help to answer your question, Hector?
Yes.
Awesome. Good question. Absolutely. I know that can be confusing sometimes, especially with the name factory overhead. It does sound like it should be, you know, just the name itself sounds like it should be an expense account, but it's actually a temporary asset account. Excellent question. And that's actually where, Hector, the concept of under applied and over applied comes from, is because those do need to be closed out at the end of the fiscal year. Very good question. And of course, at the end of the year, when we make our adjusting entries, we debit or credit cost of goods sold, and we debit or credit factory overhead based off of the under applied or over applied factory overhead. In our example, it looks like we accidentally over applied. Wait, what happened here? We under applied, factory overhead by $150. So we debit cost of goods sold and we credit factory overhead to make that adjustment. And of course, that adjustment helps to essentially zero out factory overhead at the end of each fiscal year. So work in process includes direct materials, direct labor, factory overhead. Those are the costs associated with a finished good. And our work in process account is increased by applying direct materials, direct labor, factory overhead to our respective jobs, just like we just learned about. So this kind of recaps it, right? So looking at our example, during the month of December, we finished job number 71. Upon completion, of course, we take it out of work in process and we put it into finished goods because it's done, job's done. So how do we do that, you might be asking? So as you know, the job order itself consists of direct materials, direct labor, factory overhead that made up the finished goods. And we've added all that up and it's on the job sheet. And the way that we transfer it from work in process to finished goods is we debit our finished goods inventory account and we credit our work in process inventory account. You're saying, oh, Dr. B, those are both asset accounts. Yeah, you're right. But you know, with the accounting equation, you can affect two different asset accounts as long as they balance. In our example, job 72 was started in the month of December, but was not yet completed by the end of the fiscal year. So the balance remains in work in process. Balance remains in work in process. At this point, if there's any, well, let me see. If there's any factory overhead remaining for that job that's still in work in process, it's still allocated to the work in process account. So we would still need to make that adjusting entry. Looking at our finished goods account, this is where our goods remain available for sale to our customers, right? If it's based off of job orders, the customer probably hasn't paid for it yet, which is why it goes into finished goods before it gets shipped off to our customer. And within that finished goods ledger, we have cost data for the units that we've manufactured, that raw materials, direct labor, direct materials, factory overhead, which make up the total of a finished good. That data would be in the finished goods ledger to increase the ledger. When we decrease the ledger, it's because we're selling it. So to decrease finished goods, when we sell it, of course, we are going to, we're going to credit cost of goods sold. We're going to debit cost of goods sold, and we're going to credit finished goods. Sorry, I'm getting a little tired. So we debit cost of goods sold, and we credit finished goods. And what that does is that helps us to remove from our finished goods account. But of course, before we just go taking it out of inventory, we got to also record the sale. You got to record the sale. Double entry accounting, right? So when we record the sale, we debit either cash or accounts receivable, depending on how our customer is paying. And we credit sales revenue. And as we've sold it, to take it out of finished goods, we debit cost of goods sold and we credit finished goods. And of course, there's some notes. I personally, when I do my bookkeeping, I always record the notes. The notes are very helpful. And it's also important to note, it's also important to note that when you record your notes in bookkeeping, one of the important things to do if you're using a job costing system is to, of course, record the job number associated with that sale. Just a little side note. Now, you're thinking to yourself, well, Dr. B, there's got to be other costs related to this process. I mean, it can't just be, the manufacturing costs. You are right. There are other costs. We call those period costs. And I believe we did talk about this maybe 2 weeks ago, I think. But here it is again, just in case we didn't. I think we did, though. So period costs. Period costs are costs that are incurred during the accounting period as it's related to the manufacturing process. This would include costs that are, things that are not directly involved in the process, but they are kind of involved. Examples of period costs would include things like selling expenses and administrative expenses. On some income statements, actually probably most income statements, you'll see it listed as selling and administrative expenses. And it typically will show as one of the first expense items on the consolidated income statement. And within that selling administrative expenses, you'll find things like salesperson salaries, advertising and promotion. You'll find those under your selling expenses. Under your administrative expenses, you'll find things like office personnel salaries, office supplies. Those are administrative expenses. And those are considered to be period costs because they are indirectly related with the manufacturing process, but they are simply expensed out. And so, as I said, examples of selling administrative expenses would include things like sales salaries, office salaries. And to record those during the accounting period, you would debit your salaries expenses and credit salaries payable. This kind of shows you an example of the period cost. What about the cash flows? So cash flows. The balances on your balance sheet, okay, under your inventory ledger, you'll find raw materials, work in process, finished goods, accounts, and each of those subsidiary ledgers will carry a balance. It's inventory, right? So of course it's going to carry a balance, and this kind of shows you an example of what that looks like. On your income statement, for our manufacturing income statement, just like we learned about, I think in the first week or so, we have our sales minus our cost of goods sold equals our gross profit minus our selling and administrative expenses equals operating income. Isn't that nice? That's nice. Now you see the asterisk next to cost of goods sold. The reason for the asterisk is we have, of course, our cost of goods sold. Looks like we sold 40 guitars at $500 a piece. But we also have $150 of our underapplied factory overhead. So at the end of the fiscal year, because we made that journal entry to make the adjustment for the underapplied factory overhead of $150, we see that that's why the asterisk exists, and that's why it shows that additional 150. Just thought I'd point that out. That's kind of important. Just as a side note, service businesses can also use job order cost system. So a service business like a dentist or an attorney or an accountant would use job order cost system, and the job is actually the patient or the client or the customer. And so the costs related to that would actually be the costs used for the respective patient or things like that. I wanted to include that because I thought it's interesting to know that service businesses also can use the job order cost system. Because they also have direct labor, direct materials, factory overhead. And this would be the process flow for a service business. I'm just kind of breezing through that because it doesn't really relate too much to this course, but I've wanted you to all know that does exist for service businesses as well. So when it comes to making decisions using the job order cost system, we look at the total job costs and we analyze that information to understand how much time is being spent on jobs, how much cost is being accumulated for direct materials and direct labor to eliminate waste. And that's why the job order cost systems are so important, because it helps management to identify where waste exists. Here's another example. Sometimes there might be overages on accounts. Oh, we used a little bit too much direct labor here. Oh, we used a little too much direct materials here. How did that happen? What caused it to happen? And that's the type of information we can derive from our job order cost sheets. And so it helps management to understand those differences, and it really helps us to really get a gauge of how well we're operating our business. And that, my friends, is the end of our presentation. I apologize for going 12 minutes over, but I hope that this was helpful. Are there any lingering comments, questions, concerns, anything that you hope we would cover that we didn't, or do you need any clarification on the job order costing or anything else for that matter? Anything at all? You're all good? Okay. Well, if you think of anything, feel free to let me know. You're more than welcome to post anything in the classroom, or you can always email me, call me, set up office hours, whatever.
Okay.
Everyone's good? Okay.
Yeah.
Wonderful. Well, thank you all so very much for your time today. I truly appreciate it. I hope that you all continue to stay safe, wash your hands, do the right things. Thank you all so very much for your time. And have
Thanks, Dr. B.
Yes, Gio. Thank you.
Thank you.
Oh, thank you. I appreciate you.
Thank you very much.
Thank you, Monica. Take
Thank you,
care,
Dr. B.
everyone. Thank you, Santa. Appreciate you joining us for work. I know you're busy. Thank you all so very much. Have a wonderful rest of your morning, day, evening, wherever you may be. Thank you all so much. Take care.
You too. Good